Now, let's get some analyst perspective. We've got John Kernan, Managing Director at TD Cowan. And of course, still with me on the desk is Jeff Hall. John, thanks so much for joining me. Before we talk turnaround and what could be done, let's talk what the snapshot showed us. What's working at Nike? What's not working?
Yeah, sure. There's a lot that's not working, which, you saw their revenue down double digits year over year on the quarter, with North America footwear down over 14%. A lot of that is weighted towards some of their classic franchises like Jordan 1, Air Max, Dunk, but there's not enough to offset the weakness there in the innovation pipeline yet. And you saw the company take its Q2 outlook down pretty significantly.
How did Jordan lose its way after so many decades of dominance, now falling double digits?
It was just oversupply. There was a scarcity model for Jordan. Nike had a good launch cadence going with its sneakers app and with their wholesale partners. And when they saw an opportunity to push more volume into the system because of how much they were undersupplying the market, they took it. And with that came far too much inventory. We were in a bit of a sneaker bubble during the pandemic and coming out of the pandemic. And as that faded, there was just far too much product in the marketplace, particularly around Jordan.
John, a question for you in relation to China. All the stimulation that's happening over there to get that economy going, a big consumer market, obviously, for Nike. Do you think some of these changes and some of the stimulus can actually help trickle down into Nike and help that move a little bit more?
I don't know how much the actual stimulus gets people out spending on sneakers unless it really improves people's confidence on the economy, which it would very well may. Certainly all the China exposed companies have seen a nice lift in their valuations since the stimulus was announced. But I think that will be the key. I think that, somewhere around $200 billion in stimulus directly at the consumer. There could be more. Seems to be in sync with some of the policy moves the Fed is making. So there could be more stimulus that could excite the consumer. But right now, demand in footwear and athletic apparel in China is very weak.
What would it take, John, for you to get constructive on the stock? Because people look at a sell-off, a big brand like this, under so much pressure. It got a pop as Elliott Hill was announced that he's coming back. What do you need to hear to get constructive to say, yeah, now's the time to buy the dips in Nike?
I think people are struggling to model both fiscal 25, but people are looking into fiscal 26 and fiscal 27 and trying to understand what the recovery earnings look like here and how expectations are going to change as Elliott takes on the role. And does he need to rebase earnings lower and expectations lower? And does everybody have to take their earnings estimates down again? We're below consensus with our fiscal 26 EPS estimate. That's the first recovery year beyond this year. And we see a prolonged recovery given the competitive environment.
One of the challenges at Nike is their margins. And obviously, they've been trying these new strategies. We're selling, their athleisure wear and their shoes over the internet to go direct to consumer. Because one of the models that Nike has, obviously, is they have other retail partners that take some of that margin away when they're actually selling Nikes, as opposed to someone like Lululemon that controls their stores and gets the entire margin for themselves. How much of a factor is that? And is there better ways for Nike to handle that situation to boost their profits?
Certainly, they need to take a multi-channel approach. We can see that they pushed direct too hard. The infrastructure and supply chain behind it was probably not ready for that. The demand, it would also happen at the same time. Demand for a lot of the Nike brand and Jordan brand slowed significantly. Since pre-pandemic, the last fiscal year before the pandemic, Nike's added $11 billion in sales. Their operating margin's down 150 basis points. So they had a lot of top line at a very low margin. And I think that's Elliott's biggest challenge this probably isn't a high single digit top line growth business globally anymore. It's just too big. Are they a mid single digit top line growth business? And what type of margin structure are they going to have on top of that? The margin and the gross margin is something in particular that the company, I think, really has to focus on.
You don't seem super constructive on the athletic apparel market in general. You've got holds on Nike, Adidas, Puma, Under Armour, but a buy on Lululemon. Take me into your thinking.
Yeah, Lululemon's really cheap here. They've obviously had a big slowdown in their American business this year on very difficult compares and an increasingly competitive market with two private competitors Fiore and Alo Yoga. But the Lululemon brand durability is strong. I think there's a huge fear priced in the stock right now that their operating margin structure, which is far above peers, is going to come under pressure as their American business slows. The market becomes more competitive. We're not so sure it has to come off that much. I think there's actually more they can do from a gross margin and an SG&A rate perspective. So the stock is very cheap. I'm headed over to China on Sunday night to visit them. They're hosting an analyst day over in China to show off their Chinese business, which has been growing north of 30% consistently.
Do you think that could be, to Jeff's point about China and Nike, is the additional stimulus a needle mover for Lululemon?
Yeah, I think it comes down to consumer confidence. Is this does this stimulus in the housing market and the money they're going to funnel to the consumer and additional fiscal policies, is that going to raise people's confidence to go out and spend? Savings rates in China are incredibly high. There's huge concerns over the property market there and the housing market where a lot of wealth is tied up. So it remains to be seen yet. Lululemon is in a great spot from a brand positioning standpoint. They're at the really elevated position in China, and they've grown tremendously in China. Their margin structure continues to improve in China. So they're gonna give us, I think, more targets regarding their Asia Pacific and China business when we go over there next week.